Welcome back. Now we're in the second half of 2025, and analysts are saying this is not the top, completely contradicting what we are saying on this channel here in the Cryptoviser podcast. Now, here's the deal. I don't think that we're at the top of the market, but we are very close. And now we are starting to see the move into Ethereum and away from Bitcoin. And so the Bitcoin shine may be over. And in today's video, we're going to be exploring what the SEC is doing, what Coinbase is doing, mocking the banks, Bitcoin treasury companies, Ethereum treasury companies, the DeFi ecosystem, and also major cryptos are testing resistance levels. We're going to be talking about Litecoin, Say, Polygon, Chainlink, and much, much more. So make sure you guys are subscribed to this channel. We upload every single day to bring you the latest happening in the financial world. Sometimes we do the macro conversations like we're doing today, and sometimes we do deep dives into individual cryptocurrencies. You can find all of those videos right here on my channel. You can click the subscribe button as well. And do me a favor, give the video a free thumbs up. We got a lot to discuss, so let's get right into it. This isn't the top. Now, if you've been watching my videos, you know that I have been calling the top of the market pretty much in the middle of 2025, specifically for Bitcoin. And now we are starting to see a move into Ethereum and layer twos and the Ethereum adjacent coins. And the deal is with Bitcoin right now, these Bitcoin treasury companies, they can't really make any money. But in Ethereum, this is more productive investment because you can stake and make money. You can lend and make money. You can participate in DeFi and make money. But what's going on with Bitcoin? Well, several Bitcoin on-chain metrics are suggesting that Bitcoin's market structure remains strong and the bull market has more room to run. Now that we have hit over 125, or I should say $122,000, we hit the all-time high just recently. Now here's the deal. We have the likes of Raoul Pal saying extended cycle, Michael Saylor saying there is going to be no bear market, and the Cryptoviser here saying the market is peaking out. And some of these are indicators that the market is peaking out, but let's understand the opposite side, where analytics firm Bitcoin Vector is now saying that Bitcoin's momentum has slowed. Multiple on-chain metrics suggest that Bitcoin's cycle is not over. They said, quote, momentum has cooled, but structure and fundamentals remain solid. This isn't a top, it's a coiled setup with support beneath it. Again, coiled like a spring, and you can go much, much higher after that. The Bitcoin Fundamental Index remains strong, reflecting increased network growth and liquidity, as shown in this chart, which I'm going to show you in a minute. This Bitcoin price compressed. Fundamentals are pausing, not weakening. It's the price that needs to catch up. Now, this is definitely something to think about. You know, when we do look at the Bitcoin halving tracker, we do see that 12 to 18 months after the Bitcoin halving in the previous 3 cycles, that's when the peak of the market was. And so we are in that time frame. We are towards the, I think, 15 or 16 month time frame now. And so we're literally like 1 or 2 months until that 18-month time frame after the Bitcoin halving occurs. Now, this doesn't mean that it's going to occur the exact same way that it did in previous cycles, but we could definitely use historical charts as a guide. Now, they say in the short term, buyers could simply be waiting for confirmation, the breakout, as Bitcoin plays a structural anchor for the whole crypto market. But meanwhile, the Bitcoin price is holding a bullish structure, despite consolidating in a tight range between $115,000 and $120,000. They said no breakdown, no breakout, just waiting for ignition. Once momentum aligns, the breakout continues. But as I'm going to explain in today's video, number one, the shift is into Ethereum and Ethereum adjacent layer twos, etc. And it's moving away from Bitcoin. Maybe not permanently, but definitely for a period of time that we are starting to see. And as I've showed you on previous charts, even though Bitcoin is at all-time record highs, we're also seeing lower highs and lower lows. Meanwhile, the U.S. Security and Exchange Commission approved the conversion of the Bitwise crypto index fund and then hit pause. Now, the Bitwise Index Fund is similar to the Grayscale Digital Large Cap Fund. It's a blend of multiple different cryptos inside of it. And the SEC's Division of Trading and Markets granted accelerated approval of this ETF. However, the Assistant Secretary to the SEC later stayed the action or held it and said the commission would review it. Now, we've seen this occur previously around this time of the year. In the beginning of the second half of the year. We've seen this with, I think it was Ledger X in previous cycles, as well as many other crypto ETF conversions. While I do believe that we are going to have approval, full approval, for many of these altcoin and blended crypto ETF, like funds that we have out currently, and probably a lot more, I think that it's going to be occurring possibly a little bit later in the year. And as you guys know, in my view, these are macro bullish, but also in the short term could be very bearish. And so this is not that big of a surprise, but it kind of goes to show you that things are happening in crypto right now. And there's a lot of back and forth and a lot of, I think they're testing the market to see kind of what this does, like what these announcements do. But I do think they're going to be approved. I just think they're going to be approved in waves, right? We're going to see alt ETFs and these kind of ETFs and staking ETFs and all of that. It's going to be approved. I mean, I don't see any reason why the SEC would not approve these. But it's all about the timing, and we don't know what the timing is going to look like. But we do see some of the timing kind of lining up with Coinbase mocking the banks. What in the Coinbase is going on here? In a new announcement from Coinbase, they said they added assets to the roadmap, including Banker Coin. Now, the reason I'm pulling this up is kind of as a joke, but it's kind of not a joke at the same time. We now have banks getting involved in crypto after years and years attacking the industry. The banks are writing letters to the Office of the Comptroller of the Currency to try to stop the approval of Ripple and Circle's, banking license applications. And now Coinbase is listing Banker Coin. And again, I have a feeling that this Banker Coin is probably going to do more volatility and more gains and have more actual usage than the JP Morgan coin that they created themselves. And so Coinbase is mocking the banks. I would not be surprised if we have a JP Morgan inverse crypto at some point to inverse trade where the JP Morgan coin is. Guys, we are at the point where these crypto exchanges, they hold the cards. They are the new financial ecosystem. And the banks, if they don't want to catch up, they're going to be a shit coin, just like the Banker Coin. Anyway, that was just kind of a little fun interaction in this video. But moving right along to the Bitcoin and Ethereum treasury companies. Now, we've been talking about BTCS, which is a publicly traded Bitcoin company. Well, now they're a digital asset company, but they were strictly with Bitcoin, and now I shouldn't say that. Most of their operations was in Bitcoin. They had some Ethereum operations, but now they've gone full ETH operating. And we're starting to learn more from their CEO, Charles Allen, who posted this on X. He said NASDAQ's BTCS right now is making 15% a year on our ETH collateral on Aave and paying 5% a year to borrow Tether. The Tether is used to buy Ethereum and stake it. Don't have time to explain why I believe this is happening, but it's been going on for a little bit now. Go DeFi and TradFi accretion flywheel go. Now, he said the reason that these balances are blacked out is because they haven't been publicly disclosed, and these are it's part of a publicly disclosed stock company, so they have to disclose the info before they release this info to the public. So he said that probably in the next SEC filing they will kind of explain what they're doing here. But it is very interesting. I want you guys to think about what they're doing here. They are borrowing Tether at about 5%. You can see that on the screen here, right? They're borrowing Tether at 5%, and they are loaning their Ethereum at 15%. So they're on a whole separate flywheel system than what we see with MicroStrategy. Because remember, Bitcoin is non-productive investment, meaning it doesn't make any money for you currently. Now, there's a lot of conversation about utilizing Bitcoin to back, mortgages or Bitcoin-backed loans, and we're seeing a lot of that right now. Although, let me remind you, in the previous cycle in 2020 and 2021, there were Bitcoin-backed loans, but when everything blew up, it blew up in crypto because FTX, BlockFi, Celsius, Voyager, 3 Hours Capital, all these companies blew up because of over lending and borrowing. And so this is something to keep in mind, though, because in Bitcoin, they're exploring this now. They're probably going to release Bitcoin-backed loans and all of that very, very shortly. And some companies already have, like Coinbase. When we're talking about Ethereum, this is all done within DeFi, right? So you can earn money straight up just by staking, but you can also earn money by lending. And especially in a bull market and towards the peak of a bull market, you have massive borrowing going on. This is why the percentage is so high. Because you're lending the Ethereum. People don't want Tether, right? So they're borrowing, they're doing the opposite of what the market wants. They have all of this Ethereum, so they're using it to borrow Tether, which nobody wants right now. So the APY is low. But everybody wants to borrow Ethereum. Why? Because they're trading, right? And so the percentage goes up because everybody wants it. So they're borrowing at 5%, loaning at 15%. What is the net right there? It's 10%. They're netting 10%. So BTCS, in a crypto strategic reserve standpoint, currently, they are making more money than MicroStrategy is, right? MicroStrategy, they're just buying. They're not actually earning anything. BTCS is earning. And by the way, I would imagine a lot of these other companies that are in the Ethereum strategy, they're now calling it the SIR, the Strategic Ethereum Reserve, with the ETH symbol as the E. We're seeing a lot of companies here, guys, joining and buying into crypto and specifically Ethereum. And so he continues and says how BTCS uses Aave for leveraged Ethereum yield. Deposit $100 million worth of staked ETH at 3%. That's about $3 million per year. Borrow $30 million in Tether at 5%, which cost $1.5 million per year. Then you buy Ethereum with the Tether and stake it for 4%, which is $1.2 million per year. The net yield is $3 million minus $1.5 million plus $1.2 million. It equals $2.7 million per year. The net APY on $100 million is 2.7%. The effective Ethereum exposure is 1.3 times because, again, they're buying more Ethereum. And so there's a lot of things involved here and a lot of risk involved. People don't really think about the risk when they're thinking about the gains, right? People don't think about the risk with like the yield max ETFs because they're making a lot of money, maybe 5 to 10% per month right now on their holdings. But in a bear market, those results are not going to probably be as high as they are. Here, we're in a bull market. And so this is what they're doing. I mean, it may not look smart because they're borrowing Ethereum and they're making less than if they just staked their Ethereum, right? If they didn't do this borrowing and lending stuff, they would just be making $3 million a year. But by borrowing to then stake more, even though they're losing about 1%, to them, I'm guessing the strategy is for the Ethereum price to go up. And as the Ethereum price goes up, they will probably offload the Ethereum, pay the loan back, and then use whatever gains they did to actually buy the actual Ethereum outright. Maybe, maybe not. But this can't go on forever. And by the way, he says this in his responses on X, that he doesn't know how long this kind of arbitrage opportunity is going to last. But while it is here, they're going to take advantage of it. And that is a smart idea. He said, if you want a public company to access Ethereum, here are your options: an ETF, which is plain vanilla one-to-one exposure; DATs, which are digital asset treasury companies like BTCS, like SBET, like BitMine, Immersion Technologies. These can buy ETFs and get staking yield. Or you go the DeFi, TradFi accretion wheel route, which is what he says BTCS is doing, which is ETFs and no fee staking yield and smart leverage and block building and whatever else BTCS is able to do. Because remember, BTCS is a full on company. They're not just in Ethereum, they're doing a lot of different things. And they're also, I believe, they're validating on the network as well. So he says, you're correct. The rates are variable. And it was an example. He said, yesterday we were earning 13% on a collateral, paying 5% on the borrow, which is a home run. But don't expect that to hold. And one of the things I love seeing is that this company, this CEO, understands the risk and understands that the conditions of the market right now to do this arbitrage opportunity are not going to be here forever. And because these are variable rates, once they start seeing the rates closing in and the maybe Ethereum rates going down and the Tether rates going up, or a combination of the two, or just separately, but closing that profit percentage, right? That's when they'll probably close those positions. And this is a very smart kind of plan that they have going on, because guys, these Bitcoin, like, think about Marathon Digital. The day that I'm recording this, we just heard that Marathon Digital is trying to raise another, I think, $500 million to purchase, how much is it? $850 million in convertible notes to buy more Bitcoin, right? They already hold 50,000 Bitcoin. But I want you to think about this. This is the largest Bitcoin mining company in the US, potentially the world, by hash rate, by Bitcoin holdings, by market cap. And they can't buy, their business can't buy Bitcoin, right? They're mining Bitcoin. I don't know what they're selling or buying. I haven't looked at their SEC filings yet, but this is not investable. It's actually the opposite. It's like almost a short opportunity. Because think about it. What do I keep warning my viewers about? I keep warning my viewers that the previous cycle, we had a lot of Bitcoin mining companies going bankrupt, literally, in the bear market, because the bull market, they were hoarding Bitcoin, right? At the top of the market, they were hoarding Bitcoin, very similar to what Marathon Digital is doing now. They're not only hoarding Bitcoin, but they can't even buy the Bitcoin, so they're going to buy the Bitcoin with your money. And so this doesn't work, right? Because what happens in a bear market, their buy price is so high that they're so underwater. And then they have to liquidate those holdings to keep their operation going. And by the way, I also don't think that Marathon Digital has that big of an AI strategy compared to some of the other Bitcoin mining companies. And so this is risk. And so what he's saying, the CEO of BTCS, without directly saying it, is that what they're doing is smarter, more productive, and it's going to bring more value to the shareholder than these Bitcoin strategy companies. He said, we sold $30 million last Friday at $7.90 per share. This was in response to somebody asking about them diluting the shares by selling ATM, right, at the market. Because they're raising money also. They're selling shares on the market to then go buy more Ethereum. But it's different, and I'm going to explain why it's different in a few minutes here. But before we go there, somebody asked him, like, how are you going to manage selling shares in the open market? Because if the price is going up, you don't want to stop the price going up and bring it back down by selling shares in the market. He said we sold $30 million last Friday at $7.90 per share. As the market began to soften, aka go back down, we responsibly pulled back. He said, I've been managing the ATM for over 5 years and bring experience to every decision. Suggesting that we control the stock and actively hurt the price isn't based on fact. As the largest shareholder, he says, my interests are directly aligned with maximizing long-term shareholder value. Now, I would agree with that. Like, if he is the largest shareholder, I don't want to necessarily criticize his thesis because this is his legacy, I guess, from a monetary perspective. But I also, guys, want you to look at this stock. I mean, it went from $1.40 all the way up to 7.90, and that's when they started selling, and the price has come down because the price was just kind of running up based on the narrative. But they're selling to buy more Ethereum, and the people buying at whatever price they're buying at, that's their dollar cost average. And so the likelihood that they're going to sell anytime in the near term is low. And so these new shares that are getting into the market, while they may be hurting the uptrend or the parabolic move to the upside, it's highly unlikely that somebody's going to sell lower than what they bought for at the market. But keep in mind, a lot of people were in this for multiple years, maybe. I mean, the last cycle, I mean, this is a lot of volatility, but there is a lot of performance in BTCS. I remember in the last cycle, I mean, you could have made a lot of money in BTCS. It went up to $21 from $1, so it went up 20x. And they didn't even have any kind of thesis like what they're doing now with buying Ethereum and then playing with the market to get more Ethereum and selling shares on the open market to get more Ethereum. And all the Ethereum that they own, this is productive money because they're earning staking yield. Much better than the Bitcoin treasury companies where you don't get any of that. So people are going to ask, Cryptoviser, is this a buy? Is this a buy? I don't know. I mean, do I hold BTCS? Yes. Have I sold it? Am I going to be trading it? Also, yes. Is this a long-term hold? I don't know. I think we're so early in this strategic Ethereum conversation that these are all going to go back higher, right? So if you want to lock in profits and rebuy back in a little bit, I think that's going to be all right as well, because if they are selling, they're going to be selling for a little bit, and then eventually they're going to probably stop selling for a little bit, let their stock ride, and we'll see what happens with this. But BTCS is definitely an interesting one to keep an eye on. Now, before we move on to the other cryptos that I wanted to talk about, including Litecoin, the Say crypto, Polygon, Chainlink, and more, I think it's important that we understand how these alt treasury company schemes work. The DeFi villain wrote this on X, 55,000 followers. He said, company ABC trades on the NASDAQ at $10 million market cap with a share price of $10. This is an example. The company raises $100 million from investors and venture capitalists at its current $10 market price. These investors hold almost all of the company as a consequence. We just saw this. I don't remember exactly which company it was. It may have been Bitmine or SharpLink, where they basically, all of the money that they raised to buy Ethereum, they issued basically the same number of shares that the company currently has. They issued it to raise more money. So now the new investors are basically 50% of the company, or more than 50% of the company. But these are, their buy price is right now, right? I don't know any venture capitalist that's looking to flip a profit in 5 days or a week or a month. Most VCs who get into these kind of deals, these private placements, they're thinking about like multiple months, if not years. So keep that in mind. So the company then acquires the $100 million of an altcoin to become a treasury company. He says most scammy scenario is when investors are the ones selling their locked tokens to the company. But that's actually happening, by the way. We'll get into that in a second. The MNAV, but actually, let's get into that right now, because a lot of companies are doing this, where they raise $100 million, but it's actually just them selling the coins to the company. So Jack Mallers 21, right, which is backed by Cantor Fitzgerald and backed by Tether as well. They raised however much money they raised to buy Bitcoin, and then they quote unquote bought the Bitcoin, but they didn't actually raise the money. It was a stock for crypto deal. Insiders said, we'll give you all this Bitcoin, Tether, aka Tether said, we'll give you all this Bitcoin, so we're going to sell it to you, but we want $100 million worth of the shares of the company, and they would get it. So Tether they're raising money technically. They're raising money, but it's in a stock to crypto deal. So they're not technically raising the money, and technically it's not a sale, right? It's not an open order book sale that's going to impact the market. These are off exchange transactions, private sales. Keep that in mind. So the MNAV is close to 1x when the deal is done privately. Then the deal is announced publicly. Retail can start aping into the shares of this company. The share price quickly goes from $10 to $30 because of the announcement. Then all the early investors are sitting in risk-free entry at $10. Risk-free because it's almost backed one-to-one by their altcoin treasury. The next wave of retail starts buying at $30 minimum, i.e., 3 times what that MNAV is. 3 months later, the shares of the initial investors are unlocked, and the most mercenary ones will dump ruthlessly and repeat the scheme with as many companies as possible. We're going to see this with Circle. The early investors, the IPO investors in Circle, have to hold their shares for 6 months after the Circle went public, which puts us in December. In December, when those shares unlock, oh Lord, the shorting is going to be probably maybe one of the best trades in the world. It's going to be risky, but it will be a trade. Whether you take that trade or not, that's a whole different story. But following all of this, with all these companies, is very difficult for the average person to understand. And that's why I said by the end of this bull run, I want to be out of crypto products, 100%. I think we're getting there as well, and we may already be there. Again, we don't talk about my portfolio anymore. We're talking about the market and my analysis and opinions on the market. So this DeFi villain says some people have understood that it's a guaranteed profit loop that they can rinse and repeat as long as the market still pumps the new altcoin treasury names. There's a lot of opportunities in the crypto treasury plays, but you must be aware of this dynamic going on against you. Because if you're the retail that does not you don't have access to these private deals, also be aware that this scheme can be used to get rid of locked altcoins in some cases. Absolutely. I think that with the Solana ETFs, when they get approved, I mean, there's so much Solana that has to be offloaded from big insiders. And they can't just do it on the open market because it'll crash the price. So they have to do it in these private sales. So keep an eye out for that, guys. Keep an eye out. But look at what is going on in the Ethereum ecosystem. And this is going to bring us to the second part of the video where we're going to be talking about everything besides Bitcoin, because there's a lot going on and there's a lot of money to be made, but a lot of people are missing a lot of it. So this user who is now, who founded this strategic ETH reserve website, which kind of tracks all of the Ethereum buying, he's saying that SharpLink is now #1 Ethereum company in the world with over 360,000 Ethereum. Bitmine, Immersion Technologies, that's Tom Lee's companies, right behind with 300,000, and then the Ethereum Foundation, Pulse Chain, Coinbase, Bit Digital. A little bit further down the list, BTCS, right? BTCS is number 10. And so this thing just started, and retail investors in the market, like when I think about MicroStrategy's early days in buying, I think that the next 6 months are going to be very interesting because, again, Ethereum, the price of Ethereum hasn't necessarily pumped yet, right? It's since these companies started, I think it's gone up basically about 50%. We're not at all-time record highs, not massive inflows. And I think there's a lot of deals that are currently being made to raise more money to buy more Ethereum from all of these companies and potentially more. And so there is a lot more to come. Charles Allen said in response to this about SharpLink and Bitmine becoming the #1 and #2 Ethereum companies, expect the top 5 will all be public companies. So he's basically telling you that they're going to be all public companies, and saying it without saying it, that BTCS is going to be in the top crypto companies holding Ethereum. And so we'll see about that. Meanwhile, Adam Back's BSTR, which is a new Bitcoin treasury company, said on TV that they will be the Berkshire Hathaway of Bitcoin. Now, I'm going to play that video for you in just a minute, but before we go there, let's understand a little bit more about what BSTR is. So at the end of July, BSTR is going to be launching this is the announcement at the end of July. BSTR is going to launch with 30,021 Bitcoin on their balance sheet, which should be the fourth largest Bitcoin treasury company, and up to $1.5 billion of PIPE financing, meaning coming up, and the largest ever PIPE announced in conjunction with a Bitcoin treasury SPAC merger, with the SPAC contributing up to an additional $200 million, subject to redemptions. And again, there's a lot of back deals going on here. And this is, I think, literally what that DeFi villain was talking about, because look at how this is going to work out. The company will be led by Adam Back, who's an early Bitcoin investor, right? And so up to $1.5 billion of fiat-denominated financing, the PIPE offerings, $400 million of common equity committed, priced at $10 per share, up to $750 million in convertible senior notes, $500 million committed at announcement, and then another $250 at another time, up to $350 million in convertible preferred stock, 5,000 Bitcoin in-kind PIPE with commitments from Bitcoin OGs, right? OGs giving their Bitcoin and getting shares of the company, 25,000 Bitcoin to be contributed by the founding shareholders, Blockstream, led by Adam Back, and up to $200 million in contributions from SIPO, which I don't know what SIPO is, maybe Cantor Equity Partners. I think they're getting in on this deal as well. And so retail is looking at these like, wow, this is a great opportunity for me to get in, right? Because I didn't get in early at MicroStrategy. These other companies are. But the play here is not these Bitcoin treasury companies anymore. Because again, whether you think 200,000 is going to be the top, 300,000 is going to be the top, 400,000 is going to be the top. I mean, the further we go, the closer we are. And I believe that a lot of these companies that are buying right now, we're going to have a lot of these companies in bankruptcy in 1 year from now, or maybe a year and a half from now. And so there's a lot of risk going on here because their buy-in prices are so high. And so will they be able to go through multiple years of just negative equity and the inability to finance any new purchases? That's going to be a very interesting thing to see. And again, right now, a lot of them, it's just private deals. It's just private deals. We'll give you the money, you give us the Bitcoin, and we'll move on. And in the long term, these will work out. But how can you run a company, even if it just holds Bitcoin, with a negative 50% portfolio? It just I don't know how that's gonna work in a bear market. And therefore, I think that the prices of a lot of these Bitcoin treasury companies are going to crater within the next 1 year. We'll have to see about that, but that doesn't mean that the Ethereum treasury companies are not. I think they're going to do very, very well. So we're going to come back to this video because there's a lot of other things that I want to talk about, and I want to make sure that we get to it. Let me make sure where we are. Okay, so by the way, Cathie Wood, this is from Tom Lee, who's this chairman of the board of Bitmine Immersion Technologies, a new Ethereum treasury companies. Bitmine wrote on July 22, Bitmine is delighted to partner with ARK Invest and Cathie Wood. And Tom Lee said, Cathie Wood pioneered exponential investing early on Tesla, Palantir, Robinhood, and Meta or Facebook, and most recently Circle. Her investment and partnership is Synergy for Bitmine. And she also has quite a few ETFs that are buying Bitmine Immersion Technologies. Cathie Wood responded and said, ARK investment in Bitmine is a vote of confidence that Tom Lee will be one of the winners as Ethereum powers DeFi, decentralized financial services, in the winner-takes-all distributed digital asset treasury space. Very happy to be in such good company. And so listen, like a lot of people have been asking Cryptoviser, do I buy Bitmine? Do I buy SharpLink? I mean, that's really up to you. But you have to look at when they're buying the Ethereum. I mean, they're buying the Ethereum, but they're buying it from long-term holders. And so these long-term holders highly likely are just going to hold their shares of these companies and potentially, I mean, they may sell some, but I would imagine they're probably going to hold shares in these companies for a little bit and probably like make money off selling options and stuff like that as time goes on. But we also have to understand what their lockup period is for the shares that they're being issued. There may be no lockup period at all. And that means they could start selling immediately. If there is a lockup period, that's the time that you'll start to see the slow decline in the price. But I don't know. I mean, Ethereum treasury companies kind of just started. And that brings us to Litecoin. Guys, I used to follow Litecoin all the time on this channel, like all the time. And we were big Litecoin bulls. But in the bear market, it was apparent, at least to me, that Litecoin was going on the Bitcoin path, right? Very little development, core contributors moving that development, but not a lot of interest. I mean, Litecoin is one of the most regulatorily approved cryptos. I mean, even Fidelity, you can hold Litecoin in your IRA or regular crypto account. It's on PayPal. It's on all of these different sites. But meanwhile, there's no, or I should say almost no interest in Litecoin. And so, as bullish as we were, Litecoin didn't reach all-time record highs in 2020 or 2021, and it still hasn't. And it's been underperforming a lot of the rest of the market. And there's been no major announcements, no major integrations, no major news, no major connectivity or features or anything like that. And that is an issue. And we haven't heard from Charlie Lee. And this goes back to what I say, like, guys, if you want decentralization, I get it. But there needs to be a level of centralization in everything. And there needs to be leadership that is driving the change in the ecosystem. We see this with Vitalik. We see this with, Michael Saylor and Bitcoin, right? In the Bitcoin treasury space now, Tom Lee. Like, they're kind of leading the charge. Like, this is what we are going to be doing. And here is how you do it if you want to do it as well and make money. But Litecoin hasn't done any of that. And so I thought it was important to hear from Charlie Lee, who founded Litecoin and I believe is fully dedicated to Litecoin. I don't have really anything negative to say about Litecoin as a product. But from an investment perspective, like nobody's interested in it. And that's a problem because, again, it's not just Litecoin. There's a lot of cryptos out here that, while I would consider Litecoin very different and more elevated than a lot of these other coins that have just kind of faded into the abyss and don't really do anything and haven't really delivered, Litecoin does have a lot of positive aspects to the blockchain. But why is nobody interested in it? Anyway, so let's listen to what Charlie Lee says, because this is going to be like, we're at the end stages of the bull market, guys. And so there are the possibility that some of these coins have things in the pipeline that we don't know about and that they're waiting to announce. And then we're going to see major moves in these prices. But I don't know if Litecoin's going to be able to do that. And so let's listen to Charlie Lee and maybe he will shed some light on that. And so this is a piece of an interview from Altcoin Daily. Let's listen in. And by the way, don't forget to give this video a free thumbs up. Also hit the subscribe button. We got a lot of other conversation in this video. We're going to be talking about Say, Polygon, Chainlink, and more. Let's listen in. Charlie Lee from Litecoin.
Charlie, what's the number one thing you wish more people understood about Litecoin?
I wish more people would see it as something that is useful, right? As opposed to just an investment asset that would make them rich, right? A lot of people compare, like, they're saying like Litecoin price is the same or just barely above what it was 4 years ago or 8 years ago, right? And I mean, I wish people would realize that that's a good thing, right? The point of this asset class is to be a good store of value, right? You don't want it to be a depreciating asset. You want it to be an appreciating asset. It's not going crazy like it's like comparing like some, if you want to compare the stock, it's like comparing a good company stock price, like positive movement over the years with like a penny stock that could potentially like 100x someone's money if they put all their money in there, right? So it's not a good comparison. right? So Litecoin is a long-term store of value, good investment long-term, and it's also something that is useful, right? If people should actually try to send some Litecoin, use it to buy stuff, they'll realize how useful it is, how cheap it is, and also how fast it is. That's what I want people to realize. Actually, just go out there and actually use it instead of just buying it, hoping it will make you rich.
Okay, well, let's break a lot of that down. Number one, there needs to be an incentive for me to use Litecoin, right? I'm not just going to, it's the same thing with stable coins, right? What is the incentive to utilizing this coin if it's not going to make me any money? Or if there's not even the possibility of it making me any money, right? And the other thing is, it's the ecosystem's job to elevate those things and let people know and make the friction less. So it's frictionless payments. I do know Litecoin is the number one used crypto for payments on BitPay, but that can't be the only thing, right? Like this whole crypto ecosystem, you guys have to understand, like, and this goes for a lot of cryptos, including some of the cryptos that are performing very well, but they have no product underneath them. And so their fundamental value is actually zero. There's a lot of these coins. I mean, the Sui coin, it has no fundamental value right now. There's no usage, there's no real developers on it, there's no real users on it. It's just not happening. And so how do we get to that point? Well, a lot of it comes to developers developing products that are back-end integrations into real products that people use every day, right? Litecoin can be the payment network for American Express or for Visa or for MasterCard, but they have to do the work to get there and to prove that Litecoin can do that. Just sitting around saying, oh, well, just use Litecoin, come pay with Litecoin. It's like, what is the incentive for doing that? It's the same thing. What is the incentive to use a stable coin? Well, a stable coin I can use on multiple platforms. I can earn 4.5% yield, and it's just a stable coin, right? And you may even get rewards for it or other things that are probably going to be implemented at some point to incentivize the usage of. But you can't just say, oh, well, we're great for payments, so use Litecoin. Okay, well, what am I getting in return? Because I have to convert my money into Litecoin and then hope the Litecoin price doesn't go down. Because again, if a price is going up over the course of time, consistently, as we've seen with Bitcoin, yes, I'm willing to take that risk. But if it's not going to all-time record highs, including Ethereum, Litecoin, many other altcoins as well, why am I going to use it? And so a lot of cryptos, they have this issue of not being able to market to the masses, or maybe they did a really good job marketing to the masses, but nobody wants to use their product. One example of that is Cardano. Cardano is amazing historically at getting their message out there. Everybody in the crypto industry knows when Cardano is going to launch something, but nobody wants to use it. Nobody wants to develop on it. Nobody wants to cross interoperate from another chain with it, right? And why is that? Well, I'm sure it's multifold, but it is what it is, right? And so they haven't incentivized the usage of the same way that they haven't incentivized the crypto industry, talking about it. Because anytime I talk about the one individual chain in a video, most downvoted video, I get a lot of hate, and it's just and that's just a YouTuber. Imagine somebody who is really looking to invest money and time and energy into building something on the ecosystem, and then they don't agree with something, and they're going to get the same backlash. So yeah, coins like Litecoin, you can't just say, well, we do payments really good, just try it and you'll see. It's like, no, you need to incentivize me to actually do that and incentivize a lot of people to do that. Or back end integrate with some of these payment networks so that people are interacting with it and not even realizing it, as Polygon is doing. Polygon unique addresses hit all-time record high, $517 million. Institutions are picking Polygon because it scales already. Is Polygon quietly cooking? Of course it is, right? The Polygon network is seeing so much growth right now, and people aren't talking about it. But guess what? When people aren't talking about it, that's the time that you want to invest, right? That's the time that you want to say, whoa, what is going on here? Sandeep, the founder of Polygon, said, Polygon isn't chasing adoption. We're earning it solving two problems that payments care about: fees and speed. That's why when you're seeing more transaction volume, more merchants, and more institutional pilots landing on Polygon, and why we crushed the first half of 2025. Let's read the thread. And again, this goes back to Litecoin, right? Where Charlie Lee is saying, I wish people would just use it. It's like, no, you have to do the job to get people to actually use this or backend integrate so people are using it without even realizing they're using it. So Sandeep says, starting with micropayments, which are 50 cents to $100, volume grew 67% from February to June of 2025, almost doubling from $66 million to $110 million per month. So micropayments are happening on Polygon, not Litecoin, not Ethereum, not Solana, and definitely not Sui. Polygon has the highest USDC peer-to-peer transfer count in the market, up 82% this year to 3.4 million micropayments. He said, we have more than 50% of the total market share in micropayment volume, exceeding Solana, Ethereum, Base, Arbitrum, Optimism, Avalanche, and Gnosis combined. Think about that. 1, 2, 3, 7, right? Polygon has 50%, and it's more than the next 7 blockchains combined. It's pretty unbelievable. And people are going to say, Cryptoviser, why are you talking about Polygon? Why are you not talking about Polygon? He said volume for small payments, which are $100 to $1,000 on Polygon, grew from February to June by 190% to more than $563 million. That's a Dr. Evil GIF, if you ask me. Moving on, he said that's not all. Only on Polygon and Gnosis did small payment volume actually increase in Q2. It declined on every single other chain. In May, Polygon overtook Solana in small payment volume for the first time in half a year. Last month, they pulled ahead to 40%, and the leader, Solana, in transfer share by almost double, right? Polygon almost doubled it, what Solana was doing. The same story continues with medium payments from $1,000 to $10,000. Volume grew in February to June by 137%, from $159 million to $378 million. He said, we are now the leading chain, Polygon, in medium peer-to-peer transactions with 31% market share. How could you not be bullish? Well, that's a great question, because keep in mind, Stablecoin Act, most peer-to-peer payments, most stablecoin usage, where is it happening? It's happening on Polygon. And so all of these other chains that are, oh, this chain is the best, this chain is the best. Oh, show me the data. Show me the data. Because a lot of it, as I've explained, they just want to fleece you, right? And who's they? The billionaires, the insiders, the ones that got their coins basically for free. They're trying to redo the Solana flywheel from the last cycle, because Solana, these billionaire investors, they got into Solana at like 10, 20, 30, 40, 50 cents. And then Solana went to $250 3 times, okay? $8 at the FTX collapse to $260. And so they've doubled and triple dipped already into Solana. And that's why you see nothing actually released on Solana besides meme coins for maximum value extraction. There's a difference between value extracting the ecosystem and value adding the ecosystem. One is short-term and will collapse, and one is long-term and will not collapse. Which is the long-term one? Polygon. Which is the short-term one? Solana, Sui, Hyperliquid, Huck2 a coin, etc. You guys kind of get the point there. Anyway, moving on. Back to, so he says the methodology is they removed circular transfers where wallet transfers to and from were against themselves. They removed dust amounts, less than 50 cents, and they're tracking, I don't know what EOA is, so I'm not even going to talk about that. But you guys kind of get the point. The bottom line here is that there's a lot of assets that have not pumped, that do have fundamentals, that do have usage, that people are using, whether they realize they're using Polygon or not. In my view, a lot of the Polygon transactions that we're seeing are back-end integrations into traditional financial products or traditional like financial products. And so the customer may not even be realizing that they're interacting with Polygon, but they are. In the same way that people on Polygon may not even be understand that they're interacting with Ethereum, but they are. People using Robinhood tokenized stocks may not realize they're using Ethereum, but they are. May not realize they're using Arbitrum, but they are. This is how you get these projects for long-term growth, long-term sustainability. And Litecoin has been in a lot of positions to get itself there, and that's why I am concerned still. I'm not super bullish on Litecoin. You know, it's like Litecoin, Bitcoin, Ethereum, or Polygon. What do you choose? Now add Sui into the mix, add Solana into the mix, add Cardano into the mix. Which ones are you going to invest in at this point in the cycle? It's getting harder and harder to make that decision, but there's a lot going on. Goku on X said the current rally we're seeing is, in my opinion, structured capital making early bets before the next wave of headlines. Polygon is right in the middle of that rotation. Its infrastructure has gotten some incredible upgrades over the last couple of weeks. Behind the scenes, Polygon has basically become the token powering core settlement layer for stablecoins. This includes everyday payments, peer-to-peer transfers, and enterprise rails across major platforms. Right now, the flows are heading back towards the chains with actual demand, proven users, and secure infrastructure to handle all of it. People are only starting to notice the payment side. But what about the ag layer, which we've talked about, and staking rotation? Not priced in. And by the way, Polygon is literally at all-time record lows, 25 cents, and all the coins are fully released. There's no more releasing of coins. There's no more locked tokens. It is what it is. And so there is a possible opportunity here where Polygon is going to outpace even Ethereum. And Polygon is $2.5 billion market cap. Solana is $100 billion market cap. And it has meme coins, Huck2 a coin. Tell me how that works. Tell me how that works. Anyway, we're also hearing about Say, which is a newer blockchain and it's testing a 33-cent support area. Say bottomed and pumped hard, so a retracement is healthy. Currently, it's holding bullish support at 32 or 34 cents. We either move up from here or Bitcoin decides to run and Say will have a slight comeback. But overall, this analyst believes Say Network is looking strong. And I would agree. Look at this long-term, this is from the end of last year. Nice kind of, it's forming a little bit of a cup or a bowl pattern. And then we'll see a handle coming here. And this is showing 70 cents was around the all-time record high, which would be about double where the price is, where this testing area is. But it's looking bullish, right? A lot of these altcoins, I think, that are in the payment space or newer, they do have the potential to run, including Sui, including Hyperliquid. But again, everything's going to come back to the fundamentals. And the fundamentals are not in Huck2 a coin, right? I would think that most of you would agree with that. Anyway, moving right along, we already talked about that. And Chainlink, right? How does the Genius Act benefit Chainlink? Because remember, Sergey has been at all the roundtables for crypto. He was at the White House signing and thanked the president for signing, the Genius Act, which is going to affect a lot of crypto and definitely Chainlink. Let's listen to what he says in his response, and we'll play it at 125 speed. Don't forget to give this video a free thumbs up. Let's listen in.
Sergey, Altcoin Daily speaks to an audience of over 3.5 million across all social platforms. We have a lot of Chainlink fans in the audience. I understand how the Genius Bill helps Ethereum and Solana and Tron and all where the stablecoins are built, but how does this help Chainlink?
Chainlink is stablecoin infrastructure. Chainlink is DeFi infrastructure. Chainlink is the set of standards and the infrastructure and services that allow you to build reliable stablecoins, that allow you to move those stablecoins reliably across chains. Chainlink is the largest source of proof of reserves across stablecoins, commodity coins, and other types of coins. Proof of reserves is something that I think is going to be more and more required in the form of not only stablecoins, but other forms of tokenized cash and on-chain assets. So this is extremely positive for infrastructure related to tokenization. And Chainlink is very purposefully built to accelerate and enable, let's say, high quality, secure, reliable, and compliant tokenization. And compliant tokenization is going to be particularly important because of institutional adoption of tokenization. So if you want to build a stable coin, if you want to prove what's backing it, if you want to get that stable coin moving across chain to be used for payment purposes, to buy the tokenized fund or a commodity or equity, if you want to do it in a way that complies with identity requirements, for all those things, you need Chainlink, basically. You need an infrastructure that's going to do that for you.
So there you guys have it. Is it investable? That's a whole other conversation. But in today's video, I think that we covered quite a bit, right? There's a lot of people saying it's not the Bitcoin top. But the flywheel for Bitcoin and these Bitcoin treasury companies and the moves to the upside, it seems like it's kind of getting exhausted. And it seems like the focus is now shifting to Ethereum and Ethereum layer 2s, Ethereum adjacent chains, and anything connected to these stable coins. If you guys have been following my videos for years, you know I said over and over and over and over on this channel, if your favorite coin is not connected to a stable coin, it's over. And sure enough, that has proven to be 100% accurate. And there are still chains that have zero connectivity to Tether, zero connectivity to USDC, and zero connectivity to Chainlink, Ethereum, Solana, Base, and I could keep going on and on. The stablecoins and Chainlink are the interoperability layers of blockchain. And I am still shocked that we are approaching 2026 and there are chains with none of this. Those will fail. The ones that are interconnected are going to win. Whether it's because of the usage, because of the hype, or because of actually Wall Street and more investors buying in to the network and the security and the belief and the trust in the network. But there's a lot of people that are going to be missing out because they're stuck in these coins that are not doing anything. I can't say I feel bad because we post videos every single day with winning trades regularly, with winning cryptos regularly. And some people, they just want to be 100% in this one coin. And this is the best coin in the world, whether it's Bitcoin or any other coin. You got to diversify and also listen to the market in front of you, not the market that you want. Hopefully you guys enjoyed today's video. I'll see you guys in the next video. Invest responsibly, do your own research, and crypto on.